How much can you actually make if you got $100,000 in your account? 500, 1,000, maybe even $2,000 a day? This is one of the most common questions asked not only by beginners, but even by experienced traders. The numbers sound solid and it might seem like a guarantee of strong profit, but it's important to understand that earnings don't depend on the balance itself, but on your strategy, discipline, and ability to manage risk. In this video, you will see real numbers, strategies, and also the risk involved in day trading with a $100,000 budget. Day trading, it's all about working with a single trading session where traders open and close positions during the same day. We will dive deeper into day trading in the next video. The goal is simple: catch small price movements in liquid assets, stocks, currencies, and cryptocurrencies. For some, it's a way to make quick income. For others, it becomes a full-fledged business. Many beginners tend to use high leverage, which can certainly multiply profits, but also significantly increases risk. Another common mistake is overtrading and trying to win back losses. That's a psychological trap and the fastest way to burn through your account. So why trade with a $100,000 account? It's not just big number, it's a tool that gives a trader more freedom and less stress. You can enter larger positions while keeping your risk at just 1 or 2% without fighting for every single dollar like you would with a small account. You gain choices: stocks, forex, crypto. You're no longer tied to a single market. That dramatically expands your opportunities. Risk management becomes reasonable. You can diversify trades instead of putting all your eggs in one basket. And commissions? Practically invisible. On a larger account, they are just drop in the ocean. Psychologically, it's easy too. With a buffer behind you, you can observe losses calmly without jumping into every trade just to chase them back. And the best part, your strategies start to scale. What used to bring $100 on a small account can now bring 1,000. You're already playing on a different level. Professional tools, analytics, even access to mentors become available. 100,000 in your account is not just a number, it's a completely different approach to trading. Unlike small accounts of $500 where you forced to risk almost everything, $100,000 lets you trade like a professional without excessive leverage and with a full focus on building consistent strategy. Professionals with strict risk management usually aim for returns of 0.5 to 2% per day. If you translate that into money, it looks something like this. 0.5% per day is $500, about $10,000 a month. 1% is already $1,000 a day, around $20,000 a month. 2% is $2,000 a day and nearly $500,000 a year. The number looks impressive, but here's the catch: consistency. One major mistake can set you back a week or even a month. That's why the real goal isn't to make $2,000 a day, but to follow your system with a discipline every single day. To understand the scale, let's compare different account sizes. Successful day trader with a $50,000 on their account typically earn around $250 to $500 per day. That's the same 0.51% return. As the capital grows, the numbers increases proportionally. With $200,000, it's already $1,000 and $2,000 per day. But these are average numbers for those who are already consistent. Beginners, on the other hand, often spend their first month breaking even or even in the red. And if you finish the month at least at break even during the learning stage, that's already a success. Not all traders with $100,000 choose day trading. There is another approach: swing trading. Day trading is a full-time job. You sit in front of the screen entering and exiting trades throughout the session. The results are immediate and you gain experience faster, but there is a price to pay: higher commissions and heavy emotional stress. Swing trading is the complete opposite. You hold positions for several days or even weeks. Fewer trades, lower commissions, but it requires more patience and the ability to analyze the market on a broader scale. It's calmer and suits those who already have a primary job or businesses. So which one is better? That's a personal choice. Many traders actually combine both approaches, allocating part of their capital to quick trades and part to long-term moves. This provides both flexibility and diversification. When you have $100,000 in your account, you can use any strategy, but each one requires discipline and proper testing. The main principle in trading is not to make money at any cost, but to protect your capital. And this is just not the phrase, it's rule number 1. Never risk more than 1-2% on a single trade, even if the setup looks perfect. Mistakes still happen, and our job is to make sure one trade doesn't wipe out an entire week work. Stop loss is crucial. It saves your account at the very moment when emotions whisper, "Just wait a little longer, the price will bounce back." Limit the number of trades. Too many open positions overload your mind, and that's when you start making silly mistakes. If you hit your daily or weekly loss limit, stop and analyze your mistakes instead of pushing further. Never try to chase losses. Emotions in trading are the most expensive enemy. Professionals always work with a risk-to-reward ratio of at least 1 to 2, meaning for every dollar risk, the target is at least $2 in profit. Even if half of the trades end up losing, the account will still grow over time. For a day trader, the right platform is half the battle. The platform I trade on is a modern and user-friendly platform for trading financial markets. It provides fast access to currencies, stocks, and indices. Everything you need for active trading. For a trader with $100,000 account, two things matter most: speed and reliability. Platform I trade on delivers exactly that. Lightning-fast executions, accurate codes, and intuitive interface that works equally well for beginners and professionals. When you're trading with a larger account, choose your platform carefully. Here, every second and every pip of the spread counts. In trading, the winner isn't the one with the most money. It's the one who can stay calm when everybody else is panicking. And if you watch this far, it means you're one of the few who truly want to understand how this works, not just dream about easy money. So subscribe to my Telegram channel because most people will stay spectators, but you don't have to.